It's morning here. I'm actually in Miami. I would just like to say thank you for this opportunity to be able to speak and share this information. I'm really excited for the collaboration and the efforts of everyone that's here today. As I said, my name is Sheena Fortner. I'm the CEO of Carbon Market Exchange. And as we know, the carbon markets are an evolving market, and the reason for these the cultivation of new evolutionary financial standards that can bring preservation to the forefront. In particular, there are 3 of the world's largest forests on the planet. And one of those forests are located in Africa, the other being in Latin America, and then the third being within Southeast Asia. It is such an important factor for us to continue to say that these are the world's largest forests, and the detriment of what's currently happening and the rate of deforestation is traumatic. This executive summary here is just a little bit about carbon market exchange as an overview and what we have been able to accomplish within these markets. So let me go to market overviews, and then I'll work my way back. On global levels, and in particularly within the United States, we are emitting over 6.3 trillion metric tons of carbon per year. And what does that look like? Well, I found for myself that while working in the environmental conservation arena, that it has become problematic to obtain financing mechanisms for conservation. Unfortunately, within our current world markets, trees are considered a commodity, something that is always being used. Its intrinsic value is equal to square foot as used as lumber, as hardwood extraction. The value of health, of ecosystem health, of community health, of global society well-being, it is not taken into account. And therefore, that has led us to very destructive practices worldwide. In particular, we do have Carbon Market Exchange does have projects in Africa. And we're actually working in over 62 countries around the globe. And we have seen the largest destruction that's happening to our global forest is due to green, renewable, false-based solutions. We have seen the destruction of millions of hectares worldwide for a green, renewable energy called biomass. And what has happened is that we are seeing this green revolution, and it's actually destroying us. It's destroying us as a society, and it's destroying us as a planet. I've witnessed hectares of land being sold for less than $5 US. And these trees are being cut, clear cut. They're being logged, and then they're being chipped and formed into pellets and sent to predominantly European-based countries, so that these European-based countries can have green credits. And these green credits of a false-based solution of renewable energy is killing us. It's killing all of us. So Carbon Market Exchange we're looking for solutions. How can we preserve standing forests without cutting them down, so that there is this not only an intrinsic value, but also a market-based value? And what does that look like? So one of those tools that we've brought in is to create a commodity exchange. And by doing this, we realize that the carbon offsets, the market is growing. Last year, I think we had here on this particular slide that the growth was 20% per year. Actually, the market increased over 400% last year. It's one of the strongest markets, considering that the Dow is somewhat in a bloodbath, the stock markets within the US right now. And so we're seeing an opportunity for investors, for individuals to actually be able to park their finances over a period of 5 years, 3 years, to provide an alternative investment solution to actually do good and to make money. As I stated, I believe in 2020, we saw the price evaluation of carbon increase from $5 to over $15. And so the total demand of the voluntary credits is expected to raise 1,500, 1,000%. It's problematic. One thing about nature-based solutions is there is no more land that is going to be created. Very little other than volcanic activity. And so we have a market that has a seemingly very high demand with a limited supply. One of the things that we realized, especially we participated in COP26 in Glasgow, and we realized that the potential for the carbon offset market to create new projects under CCB standard, which includes climate, community, and biodiversity, is imperative for our global health. How can we take a carbon offset, which is an intangible, something that we cannot necessarily touch or even see, a non-financial and an environmental commodity? How can we capitalize on this opportunity within the environmental movement to utilize this to expand the amount of conservation efforts worldwide? And as we were saying, within this CCB, this climate, community, and biodiversity approach, communities can benefit tremendously. Communities can have cash flow to provide jobs. They can provide opportunities for rangers, for reserve managers. It can provide countries with anywhere from 10% or higher of their GDP by simply preserving the standing forests that they have. It is an incredible opportunity. As discussed at the United Nations in COP26, it is an opportunity to be able to take funds from developed nations and to put them into countries, into developing nations. These projects, the capacity of these projects, as stated by S&P, is projected to be over $1 trillion industry. It is an evolutionary time for us to be able to capitalize on preservation. that in my lifetime, I've never seen. I've never seen the opportunity for this cross connect from the financial markets to the environmental markets. So how does this work? And I'll backstep just to give a brief overview of projects. A community, for example, or local governance can decide that they want to preserve additional forests. And in that additionality to what it has already been stated, then that can provide an economic stimulus, not only for the local community and also for the country as a whole. As stated, the demand for the voluntary carbon markets is exponential. Currently within the United States, the SEC, the securities, has put a proposal in March 2021, and we'll do a final ruling in May. And what this does is it actually tethers companies to be responsible for their emissions. The proposal that was established by the SEC in the United States states that not only do companies need to disclose for their Scope 1 emissions, which is merely, for example, let's take a large conglomerate in the US, a tech company, and they are saying that they are carbon neutral, that they have went green, and that they account for their emissions. Under Scope 1, that is correct. Now the SEC is requiring companies to add Scope 2 and Scope 3. So Scope 1, for example, would be a retail store. Let's say a large company offers a product, they put it into the store, their emissions are just keeping lights, electricity. It's very small and confined, the amount that's required for Scope 1 emissions. Scope 2 then will add in delivery trucks, something that would have to get from point A to point B to deliver those carbon emissions that are associated in Scope 2. Then we start to get outside of the nucleus of the product, and now there's a greater responsibility. The company I referenced earlier in the US has not disclosed their Scope 2, yet they are claiming that they are carbon neutral. And then Scope 3 is the example of cradle to grave. All of the elements, the rare earth minerals that are extracted, the polymers that are used, and this encompasses the entire production. Companies under this SEC proposal would be required to disclose, and which would, in essence, in the future, create a liability for these corporations. Most of the companies within the global markets are far from are prepared to do this. Scope 1, Scope 2, and Scope 3 would be 100% of their emissions. Currently, this company that I was referencing earlier, the tech conglomerate, even though they claim to be carbon neutral, they're currently only allocating for Scope 1. Scope 1 only compromises less than 1.96, less than 2% of their total emissions. So the market overview is now requiring these corporations to be responsible from beginning to end, which is going to have a tremendous effect on production. How materials are either mined, how they are produced, polymer, plastics, all of this will create a transitional simply because companies cannot function under this new modality, which is definitely a market driver. Also, carbon trading is one tool to tackle climate change. If we see climate change as this overall vision, if we understand that we need to transition as a global society, and one way for us to be able to do this is utilization of the voluntary market, nature-backed offsets, the importance of global health, not only for humans, for entire ecosystems, for plants, fauna, animals, biodiversity.
Okay, so I think we lost Sheena there, but we're trying to communicate her so we can get her back on the call.
I apologize for that short delay. My internet had kicked off. As saying, as this global vision for global health within the lives, that to establish global health, the first strategy that we wanted to focus is to the 30 by 30. That was this commemorative individuals of even has made a statement on Earth Day that he too, the United States, wants to preserve 30 by 30 30% of the planet, 30% of the marine ecosystem by 2030. We as a global society realize that the health of our ecosystem leads to the health of all of us. So one of the only ways that could for the preservation of 30% of the global planet, if we as a global social incentive to utilization of the global carbon market, we can. So here's the market drivers that we have identified. As stated, there's political pressure. The amount of greenhouse gas emissions are enormous. We realize that our current consumption model cannot continue. We do have a fixed and declining supply. Under one system, the allowance-based system, it's a cap and trade program. Governments allow a certain amount of emitters, a certain amount that companies can pollute. And then as years progress, that number continues to decline. From my perspective, this is problematic, simply because those allowances are not tethered to something tangible. Whereas in the voluntary carbon, a project in Africa that's actually setting aside 48 million hectares. These contracts are for over 30 years. Some of our critics say, well, if we're preserving 48 million hectares, well, what if we need resources from this, from these lands? What if we need minerals? What if we need different products? And within this, companies and governments can actually create a trust or create an annuity. So with the amount of money that's actually given to governments or to local communities, it's substantial. We're talking millions, hundreds of millions of dollars over the course of a project, which is 30 years. So let's say there are 48 million hectares that are preserved over the course of 30 years. The amount of money that that country will receive could provide to cover their GDP simply by investing or creating a trust or an annuity that can be drawn down from. We highly suggest to communities that we work with, as I stated earlier, I've never seen this amount of financial incentive poured into environmental conservation. From these projects that drop the carbon drops every year. That means that we have a million hectares. Of that, some of carbon is sequestered. From the standing, that payout, NGOs, communities, CBOs can work with financial advisors to create this annuity. NGOs, CBOs, community-based organizations have funding in perpetuity. I've worked with NGOs, community organizations, nonprofits in the past, and it seems that 75% of the time that is utilized within the organization is spent looking for money. How are we going to pay for our rangers? How are we going to pay for programs? How can water systems, how can we put fire engine, how everyone is constantly looking. The voluntary carbon markets actually provides an opportunity for these
We apologize on her behalf. Just a little technical. Okay, yeah, she's back in now.
as stated within Forbes, the demand is greater than the supply. So we're currently seeing a very bullish market. As I was saying earlier, we've seen prices increase by 400%. People are starting to understand and not continue business as usual. And the way to be able to do this is we want to devise. So to be able to do this, there has to be market pressure. We need to understand that we need to drive the price of the voluntary carbon market. For example, the IMF has suggested that the baseline needs to be $75. If you look to Canada in the north, they're setting a base value of $130 per metric ton. And the reason being is if we do not create a high baseline price, then companies will not be incentivized to transition. For example, some countries have suggested creating a carbon tax. Unless that carbon tax is high, where it hurts the pockets of corporations, then corporations will continue to do business as usual. We as a collective need to drive the price of the voluntary carbon offset market. So how can we do this? The markets are controlled simply by supply and demand. The current amount of greenhouse gas emissions that we globally are producing is much higher than the actual available nature-backed offsets. So that actually enters into the second phase, which would be renewables. In transitioning to renewables, we've actually seen large fossil fuel conglomerates, particularly in Africa, who have made deals with local governments for less than a third of the price of market value of carbon offsets. Companies who are coming in to developing nations, who are coming into governments, who want to make a deal. I highly suggest for anyone involved in the voluntary carbon market to look at S&P, to even go to a trading platform to see the current daily volume and to see the market price. We have witnessed on several occasions large conglomerates and underbidding, who will come in and underbid or create projects that may or may not benefit local communities. Within Carbon Market Exchange, we offer transparency. We share with governments and community-based organizations and nonprofits and NGOs complete transparency. What we're buying, each percent that is given to the community, each percent that is given to the government, what fees are associated with administration, what fees are associated with market-based values. It is imperative that communities and governments understand the value of their trees, of their ecosystems, of their biodiversity, and to put a higher value on this intrinsic value. So here are some of the market opportunities and some of the hurdles that we have seen in the financialization of carbon. Our current projects, I've said, this industry is, it's large. We're talking about projects that we currently have underway that are over $20 billion. The standardization is problematic. As we see in certain registries, verification processes are changing. We have yet to see a global standard. And in that global standard, everyone needs to participate. For example, we are working with a project in South America. Because South America is covered with the Amazon, and in particularly a country who's actually worked to preserve their forest. Under the current standards, they are not receiving the economic incentive to continue to preserve their forest. The standard that is currently created relates their standing trees and compares it to what they've actually preserved. This country, under our standard, our global standard, whether it be Vera, Gold Standard, American Carbon Standard, has created a system that it would be more beneficial for them if they had cut their entire forest. So our processes of standardizing the voluntary carbon offset need to be improved. As far as sales and trading, there also needs to be a global approach to the marketing. How can that be done? How can we create this commodity exchange of carbon offsets? How can we create a global market where not only corporations can have access, but individuals as well? Several individuals in the United States, this is becoming a speculative market. As stated before, on Friday, the New York Stock Exchange is somewhat in a bloodbath. The Dow has dropped tremendously. The US dollar, the stability of the dollar is questionable at best. What the voluntary carbon market has provided and will continue to provide is a bull market. Last year, it had increased 400%. Investors actually have an opportunity to do good and to see high returns. One way that we have been able to do this through the creation of blockchain technology. How can we take billions of offsets? I had ran some rough numbers on this 2030 initiative, this 30% of the forest, 30% of the marine ecosystem by 2030. Well, how many voluntary carbon offsets does that equate to? On rough numbers I ran, that's over 4 billion carbon offsets. 4 billion. Current evaluation of a nature-backed token or nature-backed voluntary offset, carbon offset, is currently going anywhere from $10 to $15. If we need over 4 billion, this industry will be a $1 trillion industry. So what we at Carbon Market Exchange have been able to do is we have combined this potential $1 trillion industry, the voluntary carbon markets. And then we have also merged and tethered another $1 trillion industry, which is blockchain technology. And with this merger, we have created a coin. Actually utilizing the Ethereum chain, it's an ERC20 token, XCO2, that is backed by carbon offsets. So we have expanded the breadth of the market by taking from a $1 trillion market and combining it with another $1 trillion market to help facilitate 30% preservation of the planet within the next 8 years. Time is of the essence. And the ability for us as a collective, the global we, to preserve 30% of our planet, to incentivize change, transition from an industry that we understand that is no longer sustainable. It is no longer sustainable for any of us on a global overview. So with the utilization of the voluntary carbon market, by doing good, by helping communities, carbon market exchange, we support CCB standards. All of our projects start from 2016 on. We incorporate free, informed, and prior consent. All communities participate. We bring shareholders, stakeholders from community level, indigenous tribes, indigenous communities, state officials, regional officials, national government officials, international companies, corporations, buyers. Everyone needs to come to the table. This is a problem. It is, we as a collective can be part of the solution. And as I say to a lot of our stakeholders and shareholders and even potential investors, this is something that we are doing now because it will have an effect for all of us for the next 10, 20, 30 years. We've seen an increase in weather patterns, in climate patterns. We've seen destruction, hurricanes, tsunamis, tornadoes. It's become problematic. Climate change is happening. We're seeing communities who are having to relocate because of the effects of climate change outside of just sea level rise. It's because of the destructive climate weather patterns that are increasing. It is becoming apparent that what we as a collective have done during this industrial revolution and how these effects by developed nations on the globe as a whole, it cannot continue. So we as a company, Carbon Market Exchange, propose this to help. And we want to collaborate. Anyone that's in the voluntary carbon market no one should be competing. We are all working together to bring about this 30 by 30 initiative. As we, as a global, we can preserve 30% of the planet in the next 8 years, then I hope we're all successful. And through the utilization of the financial markets tethered to the environmental preservation, conservation, it is possible. And it is a tremendous opportunity for us all. So I just want to thank everyone for being here this morning. And I would just like to say thank you for allowing me to have this time and for being able to share. And as our final slide says, together we can be the change that we want to see. So thank you once again.
Thank you so much, Sheena, for that wonderful presentation. Now I'll be taking some questions. We had an offline question. Someone reached out to us and wanted to know why there are forests in Nigeria or in Africa, but yet we've not been able to access some of this carbon finance that we're currently having a conversation about. So the question was, is it because the forest is it because of the location? Is it because we're in Nigeria? Is there that difference in verification? Is there that difference in accreditation? So yeah, that was a question we had sent to us, and I'd like you to throw more lights on that. So basically, the question is, why do we have forests in Nigeria yet we don't have carbon or climate finance to push them or preserve them? So is it because of the location, or is there maybe a reason for the verification process? Or yeah, so that's what the question said.
Great. I also just put my email in the chat as well. We Carbon Market Exchange would be happy to discuss. It could be a location. Not all carbon offsets are created equally. The highest removal that provides are mangroves, and then of course old growth forest, and then further down littoral forest, and then savannas, grasslands. So it could be the voluntary carbon market is expanding so fast that it could simply be that either the local community or the NGO may or may not have considered this. And if they have and have not been able to find carbon financing, please contact me. And we actually, my team and I will be in the Congo, also in South Africa and Tanzania this month. So we would love to initiate communication, and the voluntary carbon offset market is an opportunity. So as I said, please reach out and contact me, and we will make sure the financing mechanism is there. As I said earlier in the presentation, I have seen large conglomerates come in particularly to Africa, and have offered such a low amount. It's atrocious. I've seen companies offer pennies for something that they should be paid at least $10.
Thank you so much for that answer. I will look for if there are more questions. Okay, so we have Dr. Eugene Itwa. I think he wants to ask a question.
Thank you very much for that very brilliant presentation, Shona. I just wanted to ask, why do you think they offer so low an amount for it here? One, the integrity of our forests, I would say, are intact. And in terms of the carbon we can actually obtain from them or prevent through it, we also know how good it is. But why do you think, is it because of the methodology, the standard used, or why do you think such a low offer is given?
Why do I think the price was given so low? Is that the question, Doctor?
Okay, I'd like to buttress that question. I think he's not. I don't know if it's Dr. Itwa, are you here with us? Okay, so if I get what he asked correctly, he made a reference to what you said, an example where
let me come in. I think
okay, he's back on.
You mentioned big organizations coming to the African continent, and
yes,
they offer so low amount.
Mm.
So my question is, what could be the reasons for this?
You know,
is it clear now?
it's happening also in South America as well. I think it's that continued mentality of globalization. I think that corporations are trying, it's capitalism at its best or its worst. They're trying to get the lowest price with the greatest return. And so this is where we definitely need to increase the price for these larger corporations and have buying power and selling power. It's continuing. It's continuing in South America. It's continuing in Africa. I'm not sure it's based on the methodology. It's access to the markets. And as stated earlier, the question prior to you, well, why are people not coming to Nigeria to protect these forests? Well, it's also accessibility. It's accessibility to the markets, and with that, it limits the pricing scale. So if communities do not have access to a global market, then seemingly when a large conglomerate comes in and offers $1 or $2, it seems a fair price. And on the global markets, we know that's not correct. We can look at S&P and see that nature-based offsets are trading at $10. Yes.
Are you back to Nigeria?
Yeah.
Okay, thank you so much. We have another question because we're live. We have a question from LinkedIn. The question goes from Paul Nalu. How do we measure the impact that will be made on a project to the cost of the carbon credit? I'll take that again. How do we measure the impact that will be made on a project to the cost of the carbon credit?
Yes, so we work with a global NGO that holds their integrity. And so they assist us with free, informed, and prior consent. These NGOs actually work to protect the interest of the local communities and the local people and the local ecosystems. And so the assessment of the overall benefit is done in what we call a PDD. It's a project description document that is needed for third-party verification. And so this PDD outlines the effects for the local community, for the national governments, and for the local ecosystem. So it depends on the project. For example, we currently have a project that is provide microfinancing projects, concessionaires within the reserve, reserve management training, ranger training, eco-tourism guides training. And then also it's left to the government how those resources are utilized. So what was important for one project is access to sustainable energy. They need more power. So those resources, the government is actually utilizing a hydro dam to create more energy. And then they're actually utilizing that to bring in hydrogen. So you take a green form of energy to create the electrolysis, the splitting of the water for the hydrogen facility. So I think to answer that question, it's project dependent. It's what are the needs of the local community, what are the needs of the state, and also the country as a whole.
All right, thank you so much. All right, so we would close the curtains here. Thank you so much, Sheena, for taking our time and having this conversation with us. For those that are just joining in, we had a conversation with Sheena about carbon credits, carbon markets, or rather, carbon markets, an opportunity for forest preservation. So that's what we looked at today, and we're very glad that everyone joined in and everyone had some contribution. All right, my name is Silvana Eko, and for more information about how to go about your project, how to go about carbon credits, what's more to understand and everything else, you can follow us on social media platforms, Eko Carbon and Commodity Exchange, and you would have subsequent webinars and educational sessions that give you an overview of climate finance as a whole and our partnerships as well. Thank you so much for joining in, and do stay safe and have a good day, everyone.